Hello everyone, my name is Nomhle and welcome to our Financial Markets Literacy channel. So today we'll be discussing Introduction to Forex Market Analysis. So let's just get into it. So what is Forex market analysis? It is the study of determining whether to buy, sell or wait on trading a currency pair. So there's three different types of Forex market analysis that you would do, or just market analysis that you would do, which are namely technical analysis, fundamental analysis, and sentiment analysis. So looking into technical analysis and what it is, it's basically the framework in which traders study price movement. They do so by looking at historical price movement and determine the current trading conditions and potential price movement. So in short, what technical analysis would be, it's looking into charts. In the financial markets, there's a theory that history has a tendency of repeating itself. So we would look at previous performances to determine what the future price movement would be by looking at certain tools and certain indicators that will show us whether to buy or whether we can sell that particular instrument. And then we also have fundamental analysis. So what is fundamental analysis? It is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. So just to give you an example of some of the fundamental analysis that you might be doing, one of the tools that we use is the economic calendar. So you would have to monitor the economic calendar very closely because there might be news events coming out pertaining the currencies that you're looking at that might affect their performance or might affect their movement. To give you an example, let's say for example you're trading the euro dollar or you're trading anything that is paired with the dollar, and the interest rate results are about to come out that will affect the dollar, which is the interest rate performance in the US. So you would want to know whether interest rate is raised or if interest rate is dropped or if it's left the same. And obviously, if we were to say the interest rate is raised, you would find that a lot of investors would tend to buy the dollar because it gives sort of like investor confidence as well. And that would determine whether, or rather that would impact the dollar's movement, and it would kind of push the dollar to go on an upward trend if, however, the interest rate is increased. Okay, so that's one example. The other example would be that, let's say back in the day, during COVID days, our infamous president from the United States of America, so when he used to tweet, this is now before his Twitter account obviously was banned, this is now political events where you'd find a politician with so much influence tweeting around the political state of a country, and that would impact how the movement of that currency would pan out. If it's anything that is negatively controversial, it would obviously impact the dollar in a negative way, and anything that tend to be positive, which was rare to find considering the party at hand that you're speaking of, but it would have an inverse performance towards the dollar. So those would be other, political forces that would move the dollar to go upwards or to go downwards. And that's also recognized as what's happening fundamentally, or fundamental analysis. When Elon Musk would tweet about a certain cryptocurrency, it would affect its performance as well, where it would either go up or it would go down based on obviously what his opinion around that particular cryptocurrency would be. So those are also some of the impact that could have an influence towards instruments. So that is in a nutshell having to look at what is happening fundamentally in order for you to distinguish what will happen as well on your trades. Now, one thing that you need to bear in mind when you're making your comparison between your fundamental and your technical is that, especially if you're looking into technical, what I might be seeing on my chart is not necessarily what you might be seeing on your chart, more especially if we're looking into different time frames. So if I were to be looking at the 1 minute chart and I can see a sell opportunity, it doesn't necessarily mean you'll see a sell opportunity on the 1 hour chart. Maybe you might be seeing a buy opportunity on the 1 hour chart. So it's very, very, very important for you to be confident in your analysis, and obviously not just look into the technicals, but also check what is happening fundamentally that could influence the movement of that particular instrument, so that you know, is it short term or is it long term? Is this a trend or is it just happening temporarily and it's not a trend? So that you know whether to take the trade or to avoid those trades. And then the third one that we have is sentiment analysis. So sentiment analysis is basically looking into the trader's feelings, if I can put it that way. But if we were to define what sentiment analysis is used to basically look how other traders feel, whether it's about the overall currency market or about a particular currency pair. So when you're looking at sentiment analysis, you can either find that, and there's different sources where you can find it, which is something we will also look into as we go deeper into the series and how you can monitor that. Statistics say that between 60 to 80% of retail traders are not profitable in their trades. So when you're looking at market sentiment around retail traders, and most of them are bearish, maybe you should look at the bullish market. This is not to sound as any financial advice or anything like that, but it's just to give you an idea in terms of what you look at when you're looking at your sentiment analysis. One thing that I would like for you to also take into consideration is that a good economy results into a higher currency value when you're fundamentally looking into that, and also a bad economy results into a lower currency value. Now, when you're looking now to trade, which one is the most important between the three? The answer is all three are important. It's very, very, very key and crucial for you to look at all three different analyses before you place your trade, because you'll be going in blindly if you were to just look at one side and not the two sides as well. So this is a three-legged stool, or a 3-foot in Afrikaans, if you would like to call it. So you need all three legs in order for you to make a final decision in terms of whether your analysis is strong or not. Imagine a 3-foot or a stool with two legs only. There's going to be a bit of imbalance, right? So in order for you to have the balance, you need all three in order for you to make an executive decision and a well-informed decision as well. So there's no one that is more important than the other one. However, all three of them come together and they are just as crucially important as the other analysis. So you can't just say, based on the news events, I am buying or I am selling, but you need to know exactly when to get out. And that's where now your technicals will also assist you to say, okay, now this has been overbought or it has been oversold. Maybe it's time for you to get out at this particular point. And you can only do that if you're also incorporating your technicals as well, and also checking what is the sentiment saying. Are they still bullish or are they still bearish? Also considering the accuracy rate when it comes to retail traders, so that you are making a well-informed decisions around your trade. So yeah, those are the three different trading market analysis or Forex market analysis that you will do before you start trading. And in order for you, again, to be happy with your trades, just make sure that you are familiar with all three. So as we go forward with these videos, we'll look into obviously differently when we look into technical analysis, what sorts of indicators are there, and then we'll make examples and how you interpret them and how you would apply them as well in the market, as well as we'll look into the economic calendar and see these news events, what impact they have, what type of movement they have in terms of volumes. Are they highly volatile, or is there no volatility at all when it comes to those news events, and which ones to watch out for the most, and obviously where can you find your sentiment analysis as well. So that's what we'll be covering in our next video. And that is it for today. Thank you so much for joining me. Hopefully I will see you again next week. Please don't forget to like, comment, subscribe, click on the notification button so that you know when our next videos are out as well, and that you stay informed. Do invite your world as well to come and learn more about financial markets. Let's start the topic around financial markets. It has been an ongoing thing. Let's just continue with it, because honestly speaking, it's not going anywhere. It's like I always say, it's either you take part in making the decisions when it comes to your financial choices, or you allow someone else to make those decisions for you. So let's be active, let's partake in our personal finances, and let's learn more about financial markets. Thank you so much. Take care, and I'll see you again. Bye.